And we're back, episode 228. We know our listeners love these business episodes on a Saturday, so we're giving you another business episode. And we've got a couple of big stories, actually. So you may have seen last week, Street Talk reported that Canva, the Australian market, private market darling, has posted 30% revenue growth for the year up to May in a private investor update that Street Talk claimed will help justify its hefty Australian $60 billion, US $42 billion valuation in the face of AI-created correction. Canva apparently told investors that revenue has grown by 30% in the 12 months to May. The company reaffirmed its $42 billion US valuation last month with the entry of a new investor, Robinhood Ventures Fund. Also has US $1 billion in cash reserves. At the end of 2025, Canva publicly shared that ARR, which is the business it expects from annualized recurring revenue, was US $4 billion, which makes its revenue probably about US 3.5. While Street Talk fawned over the result, it was actually a pretty disappointing result for Australia's most valuable private tech company. And while real data is kind of tricky to obtain for Canva because it tends to release its numbers about 18 months after they happen, it appears Canva was growing at 40% in 2023 and potentially 45% in 2024. So 30% growth rate is a huge deceleration for the Sydney-based giant. Just as a quick couple of comparisons for you, Adir, rival design firm Figma, that we've talked about at length, announced they grew by 46% in the March quarter, and that were up 40% in the December quarter, so significantly higher growth. Figma, despite growing faster, trades on a revenue multiple of 9x based on recent financials. Canva, and it's a bit hard to work out Canva's numbers as much, but my calculations saw it trading on a revenue multiple of about 10 to 12, so significantly higher than Figma, despite having...
Why do you say 10 to 12 if it's 60 bill USD?
60 bill Australian.
Oh, is it? Okay.
42 USD. Okay. Meta, of course, which has a similar growth rate to Canva. I think Meta grew 28% last quarter. Trades on 7x revenue multiple.
Much bigger base.
Much bigger base and highly profitable.
And
Canva, whilst claiming to be profitable, don't make real money as yet. Figma is sort of in a similar boat, although Figma's closer to profitability.
So recently Canva was growing at 60%. And then it gradually slowed down.
I haven't seen it 60.
Yeah, like 3 years ago or something. And so the way I think about it is if you have like a 100-meter race, the difference between 30% and 60% is like Usain Bolt versus a photon. That would be my difference, right? Or Superman, right?
Yeah.
Like it's like one is superhuman and one is a very fast human.
30%'s not
It's fast. It's fast.
It's okay.
It's fast at $4 billion of revenue.
Us to grow at, not one of Australia's most glamorous tech companies.
Presumably, you're not doing $4 billion USD of software revenue, so that's a high base, okay?
Yeah, but these guys are meant to have a limitless TAM or a massive TAM. They're not even close to touching the sides.
But if I look at Meta, if Meta was growing at 28%,
which it is,
and they've got problems, Meta, but like.
Well, their problems are self-inflicted stupidity. I think that,
and they can get out of their problems.
Yeah, they'll just shut this AI.
So, what's their revenue, Meta? Like, I don't even know what order of magnitude.
180 billion rings a bell.
Yeah,
I'll get my.
So, but it's an order. It's like in the $100+ billion revenue.
Well, Google I think's got the highest, and they're at 400. Yep. I think Meta's significantly lower.
And so, if you've got this kind of revenue with a 28% growth rate and throwing off cash, then maybe if I look at Canva and they've got $4 billion of revenue, but they're growing at 60%.
3.5, or maybe 4 now.
Yeah, but they're growing at 60%. I'm like, well,
60, amazing.
That's unbelievable.
Yeah,
maybe like I can see what the valuation is all about.
Yeah, totally.
But 30% with an AI headwind.
With the biggest worry is it's dropped massively. If it was 30, 30, 30, 30, one thing, 60, 45, 40, 30
well,
is pretty ugly.
But they were never realistically going to maintain that growth rate at much higher bases. The problem is Anthropic's gone 2x, 3x, 10x, 10x, 10x. So and they're competing with them. And that is why Anthropic is a superhuman business and Canva has come down to just being a very fast human business.
I think a solid business and a really good Australian business, but not anywhere near, I think, what anybody thought they were.
Well, you know what you would do with $4 billion of revenue and a 30% growth rate. You would make $1 billion of profit.
Yep.
And I think that they're getting into the Atlassian world now, which is...
Well, I don't think they've ever made money in fairness. Atlassian at least once made money. Canva's never made money.
What I mean is they're getting into the world that we advocate for Atlassian, which they seem to have embraced, which is make some money. And so I think that like at $4 billion they've got a chance to make real money. Let's say they made $1 billion of profit. What would you value them at? Let's say they were $4 billion, growing at 30%, making $1 billion. What would you value them at?
So Canva's basically, just by the way, Canva's basically break even. They make 20 million max net. So
what would you tell me? What valuation you give them? 4 bill top line, growing at 30%. I think that's a good growth. Very good.
And this is net profit you're talking about, or EBITDA?
Net
real profit.
Yep.
So you're looking at PE multiple, 30% growth.
High quality revenue.
60 times multiple.
That would be the
net.
upper end.
Yep.
And so you would say that is a 50% higher valuation than their current valuation.
Well, their current valuation is that, ironically, what the
no.
60 billion Australian. Oh, it's about US.
Yeah, US.
Okay. So 60 billion US, yeah.
So they're in a much better position than Atlassian was in, because if they pivot to profitability, they can actually increase their valuation potentially. Yeah. And so that is why I would heavily advocate.
Assuming they can maintain growth.
Yeah, well, I think this is their biggest...
This is the question the debate we have over
Their biggest challenge is, can they really win the AI war? They think they can.
Well, they're becoming this sort of not a frontier model, they're becoming this quasi sort of second tier just behind the front. I presume they're using the frontier models, or with Leonardo, they've kind of got their own thing there. But like Figma, look at this versus Figma.
They won't take my advice, by the way. Like, this business will not pivot to profitability.
Well, they are, in fairness to them, they make 25. Unless they don't make anything.
What I mean.
They're a little bit profitable.
I'm saying pivot to profitability, 25% margins, profit margins.
Well, my question is, I don't think they can without hitting the growth rate too much.
Why do you say that?
Because
I think their costs are
unconnected
I think business
to
can
their
do
growth.
Both.
Like you can't keep growing.
I disagree with that.
You're assuming they spend zero marketing then. That's the only way you can justify
I just assume they don't spend $4 billion on marketing.
I'm not saying $4 billion, but I'm saying that they spend a big chunk. They obviously got
their costs are almost
they have got huge staff.
Yeah, their costs are almost entirely people.
But they haven't got that many staff.
Well, whatever they've got.
Let's look at Figma.
It's chewing up $4 billion.
The question is, let's look at the current valuation or current scenario. Let's forget this make-believe $1 billion profit, which may or may not happen.
Yeah.
Let's look at
it won't happen, just to be clear.
I don't disagree. But so Figma is actually shooting the lights out. Everybody's questioning Figma's dead because Claude's going to kill it. Yeah. Figma grew at 46%. And I think Figma's, if not profitable, pretty close to profitability.
I thought Figma was less exposed, personally.
Oh, I thought you thought they were more exposed.
No, because I think the thing with Figma is they're very much a B2B product.
But so is Claude.
Claude is, but if you look at what Claude's going after, so the code, so maybe you could write it yourself.
Maybe you used Claude Design and you loved it. That's
so that front end of Figma, I think, has got problems.
Yeah.
But like they've got a whole lot of other stuff that I think is survivable.
Well, clearly you're right, because I grew up 40. And the difference between Figma and Canva is Figma's growth's accelerating. They went from 30 to 46, 40 to 46. And Canva's gone the other way. So I don't know if Figma's taking Canva market share as well. But so Figma's if you look at Figma's numbers, they're only worth 13 billion, and they've got obviously a smaller business than Canva is. I think they've got just over $1 billion in revenue, not AR revenue. So call it 1.1 or whatever. So they're trading on, I think, what is a 9 times multiple, just give or take 9 times multiple. That's not too bad, but they're growing really quickly. So you're going to get a much faster multiple, and they're accelerating the growth rate. So if Figma's 9 times multiple, it's pretty hard to justify Canva being much more than 5 times sales multiple, I would have thought.
I agree, but if I'm OpenAI or even Anthropic, I would rather buy Canva for talk USD. I'd rather buy Canva for 50 than Figma for 20.
But forget the purchase for now.
Well, I think that's the exit.
Potentially, but let's just forget.
Well, you believe the IPO story?
Forget the exit for a second.
Well, that's all I think they should be focused on.
We'll get to the exit next, but just the current valuation.
Yeah.
If they want a 5 times multiple, and even assuming their revenue's grown a bit since last year, let's say their revenue's now being really generous. So their revenue now is 5 billion. Well, it's probably not quite there. It's probably more like 4.5. But say it's 5. 5 times 5 is 25 billion US. The actual last one's 42 billion. So that's a 40% drop off.
Problems. I agree with you.
This is every big VC in Australia is hitched their wagon to this and will have to take massive downticks.
But a lot of those VCs have invested at like a $4 valuation, so they're still up. But their later funds haven't.
Yeah,
their later funds will take a hit.
Yeah,
yeah. I think this is what I'm saying to you. I've said this for 6 months. Canva's entire focus right now should be selling this business to someone and taking as much of it in cash as humanly possible.
Are Anthropic or OpenAI?
They should go talk to Tim Doyle and say, how do you get a good sale here? And well,
Tim's sale was one of the greats of all time, but he also had a desperate buyer who really needed them.
Well, I don't know if you've
I'm not
noticed
sure
what's
OpenAI or Anthropic are desperate to buy Canva.
I totally disagree with that.
Really?
Yeah, this is like a fight to the death with minimal clear differentiation between models. And like what they need is customers and users.
Well, but OpenAI has heaps of customers. It hasn't helped them.
But
didn't help them. Now everybody's both the like Anthropic pivoted to Anthropic went to B2B earlier, maybe because they knew they couldn't compete with Gemini and OpenAI, and have done really well in B2B. I'm not sure Canva's got a big enough B2B business to justify somebody wanting to buy it. They've got a great B2C business, but Gemini's Google.
There's such a
OpenAI's got heaps of customers. They don't need them. Maybe Anthropic, but Anthropic don't even want consumer business. So I don't think any of these three actually want to buy them.
Yeah, I think it's an open. No, I think if I'm OpenAI, what I think is this: I'm worth $100 billion. I'm not worth $100 billion. So
OpenAI, I think they're worth $1 trillion.
$1 trillion. So I'm worth $1 trillion. Well, I'm not worth $1 trillion. I know I'm not. I can't. Even Sam Altman, he's got to realize he's not worth it.
Yeah, exactly.
And so this thing, I could probably get it for $50 USD. And if I pay cash, I can probably definitely take that out.
I think you get it for less than 50. It was last valued at 42 USD.
I know, but I'm just saying, what would they be insane not to take as a cash price?
If I was Canva and got offered 35, I'd take it in a heartbeat.
I know, but you're not inside having Canva juice pumped through your veins and a true believer, okay? So what I'm saying to you I think even if you got the Canva juice,
they're pretty rational.
I'll make it 50. It's irrelevant. It's irrelevant. So they get 50 bill, they dilute 5%.
This is an OpenAI.
Crazy valuation. Canva is one of the best known consumer brands in the world in software. They are. And so OpenAI is playing a game called we need to win this space and it's very competitive.
I'm not sure.
I would buy them. I would buy them.
But OpenAI has customers. The consumers aren't there.
What they want.
They can't monetize these useless consumers.
What they want.
Who cost them more than it costs them, they're getting 200 bucks revenue, it costs them 1,000. That's not the kind of customer I want.
I'm not just talking about customers. What they want is differentiation in a market that's becoming increasingly commoditized, and they're having difficulty with the commoditization in the B2B space.
But Anthropic's shown you can design Claude code if you want to. It probably wouldn't take them that long to design a code version and their own version.
Everyone knows Canva. They go and say, come and use OpenAI, and it includes Canva.
Everyone knew Thomas Cook in the UK as travel agent. It didn't stop them going bust. I don't think everybody knows is necessarily a value generator for an acquirer.
I think personally, we can agree to disagree on this. I think OpenAI buying Canva would be a rocket underneath them, both in terms of investor perception, but also in terms of just the general market saying, I don't really know what the difference is between Claude and ChatGPT. I mean, ChatGPT's still got probably better brand recognition. I don't know. And all of a sudden, you got Canva layered in there. I think it would change the perception of OpenAI as being once again at the cutting edge.
I don't think it makes any, I think that's completely wrong. I don't think they get any benefit from it at all. If I'm Mel and Cliff, I'd sell to OpenAI in a heartbeat. Don't get me wrong. I think
for cash.
From the sales, of course, for cash.
Yeah. You don't want that stock, right?
Maybe you can hedge it somehow. You can somehow collar it. I don't
know. You probably could hedge it.
To hedge it.
It's the Mark Cuban special.
Like your boy Mark Cuban, who just hedged it in a number of other ways.
Hedged the Yahoo stock.
ROI, radio and internet.
Yeah.
So they should be trying to sell us. I understand why they push back the IPO because you don't want to IPO in this market.
Okay, we found something we agree on, that the primary focus of Canva right now should be the exit.
I think exit and how do you make money as much money as possible in the shortest possible time. That gives them a chance to maintain optionality. But this is they are Australia's darling, but they're less darling than I think we all thought they were. This 30% growth rate is a real
slower
red flag.
Than expected.
It's like the red, when the fire. There's a fire and the alarm starts going off in the fire, but the door hasn't opened yet, so that you see the alarm going off. You can't park your car in front of it, but the fire engine's about to come out. Feels like the fire engine's about to come out.
Well, the advantage they have is that there is no door to open because they're private and they're not traded.
Yeah.
So I think that it'll be an interesting story. I do want to just reiterate though, 30% growth. I'd be over the moon with Catapult growing at 30%.
Well, yeah, it's still a great business and a great story, but I think the problem is, when you've set expectations of 40% and you're now at 30% and your vows on 40, that's the problem.
And if you say we're going to be competitive in the AI landscape, and everyone who's competitive in the AI landscape is growing 1,000%, and you've gone from 40 to 30, it's problematic for that story.
They're super unlucky in a sense. They've had these new competitors in Anthropic and GPT come from nowhere, and they got competitor with Microsoft now competing. So you got always massive businesses trying to cut your lunch.
They had forever to exit. How much time do you need to say? The thing is this, everybody thinks they're Oracle. I mean, Oracle's got some problems now as well. Yeah. Everybody thinks they're Microsoft. Everybody thinks they're Meta. I'm going to hold this business for the next 50 years. I've got news. You're not.
Yeah, but you're growing at 45%, you're flying, you've got great market power.
Sell.
Suddenly these guys...
Build, sell.
They were pretty unlucky to have these incredible businesses, whether they're valuable or not for Anthropic and OpenAI is another question, but they're incredible businesses. And then you got Microsoft, the Goliath. So they've been really unlucky, Canva, I reckon.
I'm just going to say this with a made-up number, but you'll get the gist. Every day, 5 million people in the world are unlucky. So you just need to decide, when's your day coming? Because it's not never. And so when you've got, 15 years that you could have sold a business for an absolute bucket of money?
They've only really had in terms of real valuation skyrocketing, it's probably like 2008, 17, 18. I think they only started in 2011, 12.
Years.
So they've had, 7, 8 years. They've had time, but it's not like it's been
COVID, how was that for them?
Good.
Pretty good.
Yeah, good.
They had plenty of time to sell this business.
2021, in hindsight, probably was the time. But
sell, get your money, and if you want to give it all away to charity, good on you, go do that. But it's going to be a lot easier to give money away to charity if you've got money to give away.
I'm going to pivot to a very different story, and this is the absolutely sickening story for the tech sector, which of course happened at eBay. Have you been following this?
I hate this story.
Yeah, I hate everything about it. So, and the New York Times gave a great summary of it. So back in 2019...
My daughter, by the way, she's been using eBay to sell, she's got a little eBay business, very impressive, and then she tried Vinted, literally yesterday, and something that did not move on eBay for weeks... sold on Vinted within 1 hour.
Really?
Yep, 2 items.
Is this right? I've been using, I used to like Facebook Marketplace just for giving away stuff or selling something really cheap. I put some stuff on, like some office desks on Marketplace, and I used to get really good inquiry, get rid of it in like 10 minutes. Yeah. I've had like 100, it feels like bots or shitty inquiry. Like Facebook Marketplace is completely shitified.
I found a Facebook Marketplace almost impossible to use as a buyer, by the way.
I used to love it, but it's now hopeless. As a buyer, I've had a few good experiences, but as a seller, it's gone from great to terrible.
Well, Vinted seems to be taking over the market.
Okay, interesting. So in 2019, eBay executives had an issue with a tiny news site and message board for eBay sellers. It was called E-Commerce Bytes. It was run by a slightly older couple, Ina and David Steiner in suburban Massachusetts. I think they were in their 50s or 60s at the time. What they did to anger eBay was noting that the CEO, a guy called Devin Wenig, earned 152 times the average worker, which is hardly like a great, powerful statement. Everybody knows this.
That probably has only increased substantially since that was written, right?
Absolutely. But rather than buy the site or threaten legal action, eBay employees in its so-called security team started literally terrorising this poor couple. The employees sent Steiners offensive and suggestive items, hounded them on social media and stalked them at home, including trying to install GPS tracking devices on their car. This is actually way worse than it sounds. They also sent them a funeral wreath, a copy of grief diary surviving loss of a spouse. Bear in mind, they don't know who was sending them this stuff. They thought there was like some guy trying to kill them.
In fact, they would certainly not have thought it was eBay.
No, and they even sent them a bloody pig mask worn by the killers in the Saw movie. So this is just horrific. It's literally corporate terrorism that was happening here, paid for by eBay shareholders, no less. In 2020, and they found out, I think they happened to catch the number plate of a car and they traced it back to eBay. In 2020, federal prosecutors in Massachusetts indicted 7 former eBay executives, current at the time, now former eBay employees, including head of security James Ball, who seems like the absolute worst bloke on earth, on charges of cyber stalking. Disgraced former eBay workers pleaded guilty and receiving sentences as much as, I think, almost 5 years jail, which is probably less than they deserved. The company itself, though, as always is the case, got pretty much scot-free. They paid a $3 million fine, which is basically irrelevant. This is a $50 billion business now. Or actually more. It was $50 billion now. It's actually tragically at record share price. Now it's $50 billion.
Because there's a war going on to acquire it by the guy that started Chewy.
That's right.
Through
of course,
his,
the Ryan Cohen thing.
Yeah.
Disgraced former CEO, Devin Wenig, who was subject to the original comment, was staggeringly never charged himself. He left eBay with a US $55 million payout.
It's so ridiculous.
This is everything that's wrong with corporate America or corporate.
Because what the argument is that, this seems to be true, the security division of eBay turned into a cult, right? Yeah. It turned into a cult is the only way to describe it. And if you read we can get into detail, but if you read it, there were definitely cultish aspects of it. But what they're saying, what they're accepting is the people running eBay and the company as a whole can say we were ignorant of the fact that our security organisation was running a cult and terrorising people, I think that's totally wrong.
Absolutely.
If I could decide this, I would literally fine eBay $1 billion for this transgression, so that no company in the future would ever dream of doing something like this.
The bigger thing you'd do is you'd put the CEO on a perp walk, because I think it's got the fish Asher Watson there. They put the minions in the. So the CEO at one point told his communications chief about one of the couples, if we're ever going to take her down, now is the time. So this fish rotted from the head.
Oh,
clearly.
I see. So there's actually evidence that the CEO knew exactly what was going on. Well, the CEO knew something was going on.
He was the one who got the ball rolling. It clearly then got out of hand down the line.
I think it's tough to put him in jail for that, but definitely there should be penalties.
How much responsibility does a leader of a business have for what the underlings do? When we see, the answer is nothing, certainly in the US. But
when would you say he should be absolved? I would say if there was no evidence at all that he knew anything was going on with this couple, then you would say it's a pretty incompetent CEO for not asking questions about what's happening in security.
I think if he knew nothing, then jail was probably a bit harsh, but he can certainly get fined.
Yeah.
And he was not. He actually contributed. So basically,
what happened? Who does security guy report to? Not him.
No, I think it went to comms, and so I think it went down the line.
Yeah.
But so the Steiners eventually got a lawyer and sued eBay, thankfully. And only last week, this is why I'm bringing it up now. So last week, the parties actually settled for, it was total about 55 million US. So this is some pretty serious money. 46 went to the Steiners, 7 million went to charity. Devin Wenig, that scumbag CEO, had to pay 2 million to the Steiners himself, and $1 million to charity. So there was a little bit of justice there that he had to pay something, but he got US 55. So it's a fraction of what he got paid. This is, if you look at everything that's wrong with the corporate world, this story.
Well, the biggest damage that happened to him was the fact that you read this in the Wall Street Journal. And I mean, that's probably the biggest damage that he suffered, because the $2 million is largely inconsequential.
Yeah. Well, totally inconsequential. It's not even 5%. It was 5% of what he got paid as a severance, let alone what he got paid along the journey.
Yeah. So that's inconsequential, right? So I think we agree completely on this. The problem is this. What's happened is, in an effort to make companies more accountable, they've increased the governance obligations on non-executive directors. That's what's happened in Australia, for example.
This is obviously America, not Australia.
I know, but I'm just giving an example. So it's not like people are blind to the fact that companies should have more responsibility. But what they do is they increase the penalties and the obligations on directors without realising how little control directors actually have over executives in the company. Especially, no director could reasonably have been expected to know that this stuff was going on. And in the meantime, this stuff is completely unacceptable. And I think that companies should have serious fines.
Well, I think I'm actually less bothered about the company. I think it's good that the company's settled. I think the senior executives Wenig down should have had much more personal. Unless, as Scott Lowe says, unless you perp walk these people, it will just continue to happening. Because now, who cares? The company pays. These guys don't care. It's a $50 billion company. It's like 0.1% of the company's market cap was paid here. It's completely irrelevant to the company.
This is worse because this is a company using all of its massive resources to terrorise two individuals. But in general, you'd have to say no one suffered any consequences from the financial crisis.
Yep.
Who suffered any consequences? Yeah. Enron? Largely people got off.
People went to jail at Enron.
Yeah, but largely people got off from Enron. A few unlucky people went to jail.
Enron's one of the rare instances people actually did. A lot of people went to jail for Enron. You know the one guy who didn't go to jail?
Yeah, Skilling. He didn't go to jail.
Skilling went to jail.
Oh, he went to jail?
Skilling absolutely went to jail. Okay. Ken Lay didn't because he died.
Oh, that's right.
But there was one other guy, and I think his name was Pi. He was a big Enron, one of the senior Enron executives, and probably had a heap of Enron shares. And maybe like a year or 18 months before Enron collapsed, he left his wife to marry a stripper, because Enron had this famous stripper culture. Left to marry a stripper, and I think he got fired as a result, or he left.
That's Enron. Right. And he had to sell all his shares.
Sold $280 million worth of shares. Was never charged. He was the only one who got away with the money in Enron because of the strip. Yeah. So I think the moral there, you see this Instagram meme. The moral there is strippers pay off.
And I would say, I can't comment on that, but I would say also that one thing to think about is, if you want to hold executives accountable for behaviour in a company, endlessly increasing the obligations on directors who get paid $100,000 or $150,000 a year, that is not the way to do it. That just turns the boardroom from a strategy session into a governance session.
To a risk management session.
But that is not the way to increase accountability on
the one thing, and Macquarie's probably the best at doing this, is one way to keep executives doing the right thing is give majority of your remuneration equity and make it 10 years. Like
Yeah,
you
hold it
grow, you
back.
can't sell
Yeah,
10 years. In 10 years' time, like stuff gets revealed. If you can sell stuff like Alan Joyce straight away, then like bad stuff can happen. But that you kind of need to reduce agency costs by aligning shareholders and executives. And this is just a classic example of no alignment at all.
Yeah, agreed.
On that note, we'll say goodbye. It's been a great Saturday episode as always. See everybody on Tuesday for our big episode.